Good afternoon, everyone, and welcome to Low Load Insurance Services' 5th webinar of 2010. Today's presentation will be about 45 minutes and will be followed by a Q&A session. It is being recorded and will be posted to our website by the end of the week. As a reminder, you will earn 1 CFP CE for attending all of today's webinar. We will provide proof of your attendance to the CFP board and will email you a certificate of completion. Please note that you must be logged on to the webinar for at least 50 minutes, though, to receive this credit per CFP board policy. We welcome your questions and your participation. However, because of the large number of attendees, please note that all lines are muted. If you have questions during the presentation, you can type them into the question box on your screen, or we will open the lines for questions at the conclusion of the presentation. Now on to the presentation itself. Our presenter today is a CFP and an MBA. He is a member of the National Association of Insurance and Financial Advisors and a frequent speaker for the Alliance of Cambridge Advisors and NAPFA study groups. He is also a contributing insurance resource to industry publications including Businessweek, Bloomberg.com, NAPFA Advisor Magazine, AMA Physician's Guide to Financial Planning, and most recently for Jane Bryant Quinn's new book, Making the Most of Your Money Now. As the son of insurance experts, Keith and Judith Maurer, today's speaker grew up in the insurance industry and has an impressive combination of education and mentoring. He constantly monitors the insurance and financial service industries, and under his leadership, LLIS continues to expand its portfolio of products and services. His dedication, along with his unique industry perspective, education, and experience, allow him to build upon the LLIS traditions of cutting-edge information and customer service that fee-only financial advisors and their clients have relied upon since 1992. Mark Maurer, take it away.
Hi, everyone. Thanks for joining us again today. And today, there's a lot of information to cover, and so we're going to jump right into the presentation. We're going to talk about disability insurance today and protecting your client's retirement. We're going to do a little bit of basics about disability, just in some things that we get lots of questions from advisors on, and maybe just help make that a little bit clearer. Talk about different types of disability policies and how we can help protect a client's retirement through those. So we talk about why is disability insurance important. I'm sure that in every one of you, when you have your client meetings, you talk about disability insurance. And I really like these statistics because I think it talks about why is disability important. Based on a study, 1 home in 133 will catch fire. And I'm sure that any of you who have clients who own houses, you make sure that they have homeowners insurance. 1 in 90 drivers will be injured in an auto accident. Again, I'm sure that your clients have auto insurance. It just would be something that prudently everybody should have. 1 person in 8, though, is going to become disabled. So when we look at what is the likelihood of someone needing these different types of insurance, I'm sure that every client has homeowners insurance. I'm sure that they have the auto insurance, but the likelihood is they're going to become disabled, and do they have the insurance, the disability insurance, to protect them? So what we're going to cover, we're going to talk about a little bit of disability basics, retirement disability plans, which are relatively new but have been around for a few years, disability insurance planning for business owners, and disability buyout coverage. Also some trends in the disability underwriting. As people are starting to send in questions, if I don't get to them during the presentation, I will be back with you in the next couple of days to answer each of your questions individually, either with a phone call or email. So I'm going to print this out when we're all done. You're not being ignored. So just know that if you submit those online, I will get back with you. So one of the basics we talk about is how much is a client going to qualify for and how are benefits calculated. I think most of us know the 60% rule of thumb. And that's just something that in our heads we all use because it helps us get a back of an envelope number. And that's pretty close a lot of times. But a lot of times it's not going to be. It's really a number calculation based on income, and from an insurance company standpoint, it's primarily the take-home. And so as a client's income increases because of taxes, they're taking home less percentage-wise. So someone who might make $1 million a year is not going to be able to qualify for $600,000 of disability insurance. There's many things taken out of that, like taxes. Additionally, how disability insurance is supposed to protect you, but not necessarily make it so that you have a incentive, let's say, that to become disabled, and then you would essentially be set for life. I'd like to try living on $600,000 a year. I think I'd be pretty good at it, but from a disability insurance company standpoint, that's not really, you're not really necessarily in a hardship scenario at that point. Salary, bonuses, commissions. I want to talk about bonuses, commissions. Insurance companies like to see a history, 2 to 3 years. What aren't normally considered are things like stock options, because you aren't living on that. It's not cash. It's not used as your take-home income, even though it can be a large part of a client's income. It's not what they're living on. Reimbursements for business expenses. This gets to a little bit of someone who may make $200,000 a year, but expenses out $100,000 a year because they have a home office. They're very aggressive. From a disability insurance company standpoint, what you're living on is $100,000. What they look at is if the business went away, you would not have the $200,000 of income, but you also wouldn't or shouldn't have the $100,000 of business expenses. And insurance companies differ. The 60% rule, again, is nice, but I ran some numbers with 4 or 5 different carriers with a client that has $125,000 base income. I was surprised that not one company had the same number. We're all in a relatively narrow window here, but I really was surprised that no one came exactly the same. So many times the answer is how much do they qualify for? It depends. It depends on what company. It depends on what other benefits they might have, how their income is established. Now this is a different calculation, the same $125,000 base income, but this client has 60% employer-paid group disability. The fact that it's employer-paid, then it would be recognized as taxable income to your client if they went out on claim. And interesting here, there's a much wider variation between different companies on how much supplemental individual disability that they would allow or consider for a client on top of those disability benefits. And so, again, depending on the company, almost none of these were actually exactly 60%. So we're close, but it all depends on the different types and amounts of coverage. Another thing that we get a lot of, and any of you have talked to us and gotten a quote, you may have gotten an email back from me, an email back from Kathy, that talks about, maybe Jill, their occupation class. The occupation class of president sounds good, unless he's the president of a company that manufactures volatile chemicals, and he is the sole employee of that firm. So president sounds good. Guy who mixes volatile chemicals in his basement doesn't really sound as good from a disability insurance company standpoint. So we talk about what are the client's duties. Your title is helpful, but what is that client doing on any given day? Where are they performing those duties? Are they based out of an office, or are they based out of the home? The reason that this is interesting is, for most people, if you become disabled, that means you can't go to work. If you can't go to an office, we can show that. The question then becomes, if you're in your home, how disabled are you that you can't work from home? So there's a lot more gray area. Usually for a home-based business, carriers want to see more stability than someone who has to get up every day and go to an office. Is this person a business owner or an employee? Employees tend to be a little easier to underwrite because they are, basically they get a salary. A business owner is going to probably have fluctuations in income based on how well the business does or doesn't do. Years of experience in same or similar field. Many of you have gone from working in the financial industry to having your own fee-only practice. You're in the same field. Many of you were an engineer and then got into the fee-only practice. So years of experience, it's from an insurance company who doesn't know you, it's more reasonable to assume that someone who's been in a financial services and going to a different version of that is going to have some reasonable expectations of income than someone who's going from a completely separate field.